A market is any place where buyers and sellers meet to exchange products and services. And an early decision for any business to make will be whether they're going to look to appeal to all customer groups as part of a mass marketing approach, or to target a smaller segment of the market using niche marketing. Each of those approaches will have their own benefits. So niche markets will have fewer businesses in competition with each other, so they can stand out more with their marketing. Businesses will know their customers more, and so will find it easier to meet their needs. And as a result of this, it's more likely they'll get away with charging more premium prices, and so there's more scope for adding value. That's the difference between the cost of making a product and what it's actually sold for. And businesses are likely to be smaller, so they'll face lower startup and capital costs as well. Weighed against this, the potential for growth in mass markets is much higher. So there's more opportunities to increase revenue and therefore profits. Producing on a large scale brings the benefits of economies of scale, meaning larger businesses tend to have lower costs per unit. And while it's also more difficult and costly to enter the market, that's a problem for the new entrants. For an incumbent firm, once it's set up, that can provide quite a nice shield against the potential of new competitors coming in. And operating on this scale can also bring benefits in terms of greater brand awareness as well. Now, when we talk about markets more generally, we might be interested in the size of an entire market. And this could be the volume of sales by all of the businesses operating in that market in units, or more likely we'd look at the value of all of those sales in pounds and pence. And market share measures the proportion of these sales which are carried out by one individual business. And that will be worked out by dividing the value of their sales by the total sales in the market and multiplying that by 100 to give a percentage figure. Now, whatever the market a business is operating in, whether it's large, small, niche, mass, it will be really crucial to think about how they'll differentiate themselves from the competition. And one of the most important ways to do this is by having a clear brand with identifiable characteristics that can help it to stand out. Now, businesses need to be alive to the fact that markets are changing and developing all of the time because there are a range of dynamic factors. So some businesses, like ASOS, base their whole business model around online retailing. Others, like Tesco, have had to add an online offering to what they do in store. But very few will find they're able to survive without embracing online retailing in some form or other. You also need to be able to adapt to changing social factors. So that could include trends, fashions, consumer views on things like healthy eating, ethics and sustainability. And then also be able to stay ahead of the competition by innovating. So this could be by process, which is making improvements to how the product's made, maybe streamlining this process to make it more efficient, or by product. It's new product development in large part, which drives demand and allows markets to grow. And all the while monitoring levels of risk. And that's the chance of something going wrong and incurring a loss. And also uncertainty, which is where there's a range of possible outcomes which are unpredictable. And being successful in business is not about avoiding all risk, but managing it and accepting the need to take an acceptable level of risk in order to gain rewards, often in the form of profits.